How to deprogram the casino mentality. Most traders don't realize it, but the habits they picked up when they started. The constant clicking, the rush to be in a position, the thrill of quick wins, are the same habits that keep casinos in business. You tell yourself you're building a professional process. But underneath, there's still the urge to gamble. To feel alive. To prove you can beat the house. This video isn't about judgment. It's about freedom. Because until you see how the casino mentality is wired into you, you'll keep calling it discipline, when it's really compulsion. This video is not financial advice. It is for educational and personal development purposes only. Trading involves real risk, and nothing here guarantees results. Always do your own research and take full responsibility for your decisions. Chapter 1. The rush that feels like progress. The first time you click that button, you feel it. The surge. The tension in your chest. The electric possibility that something big is about to happen. Win or lose, your heart is racing. And for a moment, you feel fully alive. That's the rush. The same chemical flood that keeps gamblers glued to slot machines. And in trading, it's easy to mistake that feeling for progress. I once coached a trader named Kevin. He was 31, living in Dublin, working in IT by day and scalping Nasdaq at night. He started with a small account, just for fun. At first, he told himself he was experimenting. Testing strategies. Learning. But he noticed something. Whenever he tried to slow down. To trade fewer setups, to hold positions longer. He got restless. He'd tell himself, I'm not learning if I'm not active. But that wasn't true. He was confusing action with growth. Because every time he clicked, he got the rush. And the rush felt like proof he was doing something important. This is how the casino mentality creeps in. You start to associate the feeling of adrenaline with being a trader. You think the excitement means you're making progress. But most of the time, it's just your nervous system getting hooked on dopamine. The brain doesn't care whether you win or lose. It cares that you're engaged. The more often you trigger that cycle, the harder it becomes to trade without it. Think about your own experience. How often do you open a trade because you're genuinely following a setup? Versus opening one because you're bored? How often do you stay in a position longer than you planned because the uncertainty feels thrilling? How often do you feel an itch to act just to feel like you're doing something? This is the casino wiring. And it can ruin even the best strategy if you don't deprogram it. So how do you start? First, practice noticing the difference between engagement and excitement. Engagement feels calm, clear, steady. Excitement feels jittery, urgent, compulsive. Before you enter a trade, pause and ask, am I calm, or am I chasing the rush? That question alone can interrupt the cycle. Second, track how you feel before and after every trade. Make a column in your journal labeled state. Write a few words. Centered, anxious, bored, excited. Over time, you'll see a pattern. And you'll know when you're trading for the wrong reasons. Third, create a rule. No trades in the first 15 minutes of your session. This gives your body time to settle before you start clicking. If you can't tolerate sitting that long without action, that's the sign you're chasing stimulation. Fourth, define progress differently. Progress isn't measured by how many trades you take. It's measured by how consistently you execute your plan. One clean trade is worth more than 10 impulsive ones. Fifth, consider replacing the thrill with something healthier. Kevin started going for a quick walk after each trade. It helped discharge the adrenaline and reminded him he didn't have to stay glued to the screen to be a trader. If you recognize yourself in this, you're not alone. The rush is powerful. It's designed to be. But you can learn to see it for what it is. A feeling. Not evidence of progress. And the moment you stop measuring your growth by how much adrenaline you feel, is the moment you begin to trade like a professional. Chapter 2. When randomness feels like skill. Every trader has that phase. The phase when you don't really know what you're doing, but you're winning anyway. It feels like validation. Like proof that you have a gift. That you're intuitively good at this. But more often than not, you're just experiencing randomness. I worked with a trader named Soren. He was 36, living in Copenhagen, trading crude oil futures. When he started, he had no real system. He'd enter on impulse, take partial profits when he felt nervous, and add to losers because the chart looked strong. Yet somehow, his first 2 weeks were green. He called me after his 10th winning day in a row, saying, I think I've found my flow. But when I asked him to show me his plan, he hesitated. Because deep down, he knew the truth. He wasn't following a process. He was just getting lucky. This is how the casino mentality hooks you. You confuse random positive outcomes with skill. You believe the market is rewarding your intuition. But the market doesn't care about intuition without structure. Over time, the math catches up. The same randomness that made you feel like a genius starts to expose your lack of discipline. And when the losing streak comes, it feels like betrayal. But it isn't betrayal. It's just statistics finally showing up. Ask yourself. Have you ever had a stretch of trades that felt too good to be true? Did you take that period as proof you didn't need rules? Did you size up because you believed you were simply in sync? That's the casino mentality at work. Luring you into overconfidence. Here's why this is so dangerous. Random wins create the illusion of control. They feed your ego just enough to keep you from building a real edge. Because why would you slow down and define a system when you're already winning? But the market has no memory. It doesn't reward who you are. It rewards what you do consistently. And if your results are based on randomness, no amount of positive thinking will protect you when the probabilities shift. So what can you do? First, document every trade. Especially the ones you win by accident. Write down exactly why you entered. If you can't articulate a clear rationale, mark it as a random win. This alone will reveal how often you're relying on luck. Second, create a rule. You must be able to explain any trade to another trader in 30 seconds. If you can't, you don't take it. This forces you to build clarity and discipline. Third, slow down after a hot streak. When you're winning, your brain wants to speed up, take more risk, and prove you can't lose. Instead, commit to reducing size for the next 10 trades. Think of it as a reset. Fourth, track your outcomes over at least 50 trades. No single trade, or even single week, defines your skill. Your edge only shows itself over time. If your results swing wildly, that's a signal you need more structure. Fifth, practice humility. Tell yourself, my last win does not prove I'm invincible. My last loss does not prove I'm incompetent. Only my process proves anything. Soren eventually admitted to himself that his early success wasn't skill. He spent a month defining entries, exits, and risk. His win rate actually went down. But his consistency went up. And for the first time, he felt calm. Randomness will always exist. The difference is whether you know it's there. Or pretend it's evidence of your brilliance. If you can see it clearly, you can protect yourself. And that's what separates traders from gamblers. Chapter 3. The high of being in action. There's a moment, right after you enter a trade, when everything else disappears. Your mind goes quiet. Your attention narrows to a single point on the screen. All the doubt, all the noise, all the uncertainty. Gone. For many traders, this is the most addictive feeling in the world. I worked with a trader named Luis. He was 29, living in Porto, trading micro futures. He had a day job he didn't like, working in customer service. At night, he'd sit at his desk, charts glowing in the dark. He told me, when I'm in a trade, I feel like I matter. Like I'm doing something real. It didn't even matter if he won or lost. What mattered was that he was in action. That's how the casino mentality traps you. It teaches you to crave the feeling of engagement more than the results. You start measuring your days by how many trades you took, not by how well you executed them. You start believing that being active means being productive. And every time you feel restless, you click. Not because you see an edge, but because you need to feel that surge of purpose again. It's no different from a gambler who just wants the dealer to deal another hand. Because when you're in action, you don't have to feel your uncertainty. You don't have to sit in the discomfort of not knowing. You don't have to face the possibility that doing nothing might actually be the best decision. Ask yourself, how often do you feel uneasy when the market is open and you're flat? How often do you start scanning timeframes you don't normally trade, just to find something? How often do you enter mediocre setups so you don't have to watch in silence? That's not discipline. That's compulsion dressed up as work. Luis eventually realized that most of his worst days started the same way. He'd wake up tired. He'd tell himself he'd be patient. And by noon, he'd be 4 trades deep. None of them planned. He thought action would calm him. But it only ever amplified his frustration. So how do you break this cycle? First, create a plan for what you will do when you're not in a trade. Write it out. It could be reviewing past sessions, reading a trading journal, or simply stepping away from the screen. Having a structured non-trade routine reduces the urge to invent setups. Second, track how often you enter positions that don't meet your criteria. Be honest. Call them what they are. Action trades. Seeing the pattern in black and white helps you take responsibility. Third, practice delaying action by 5 minutes. When you feel the urge to click, set a timer. In that pause, ask, is this trade part of my plan, or just a way to feel busy? If it's the second, you walk away. Fourth, reframe flat periods as productive. Being flat doesn't mean you're failing. It means you're respecting your edge. Repeat this to yourself daily until it feels true. Fifth, Consider introducing micro movements that don't involve trading. Luis started doing quick bodyweight exercises when he felt the itch to click. It gave his nervous system a release without risking his capital. Here's the truth. You will never eliminate the desire to be in action. It's human. But you can learn to notice it without obeying it. That's what professionals do. Being flat doesn't mean you're lazy. It means you're patient. And patience is the one skill that gamblers never develop. When you stop measuring your worth by how often you act, you finally start building something real. A process. A record of discipline. A life outside the constant rush. Chapter 4. The illusion of quick money. When you first discover trading, it feels like you've stumbled onto a secret. A way to make money without a boss. Without commuting. Without waiting years to see results. You start to imagine how fast everything could change. A few good trades. A lucky streak. A perfect run. And suddenly, all the problems you've been carrying could disappear. I worked with a trader named Daryl. He was 43, living in Atlanta, driving a delivery truck during the day. He started trading options with a $3,000 account. Every night, he'd run simulations, plotting how quickly he could 10x his money. If I can just double it twice, I can quit my job, he told me. He wasn't arrogant. He was hopeful. But that hope became a trap. Because every time he made a little progress, he immediately raised the stakes. He started taking larger positions, convinced that if he could just string together a few big wins, he'd be free. But the faster he chased the money, the faster it slipped away. That's how the illusion of quick money works. It keeps you locked in short-term thinking. You stop seeing trading as a business. You start treating it like a ticket out of your current life. And the more you believe in that fantasy, the harder it becomes to respect risk. Ask yourself. Have you ever told yourself that just one big trade could change everything? Have you ever broken your plan because the payoff felt too good to pee back up? Have you ever sized up beyond reason, promising you'd go back to discipline after this one win? That's not strategy. That's gambling. The illusion of quick money has another cost. It keeps you from building sustainable habits. When you're always focused on the fastest path, you never invest in the slow practices that actually work. Consistent journaling. Small position sizing. Learning to sit through drawdowns without panic. Daryl eventually lost nearly half his account in one impulsive week. When we talked afterward, he said, "I thought trading was going to save me. But I see now that it just showed me how desperate I was to be saved." So how do you dismantle this illusion? First, define realistic timelines. Write down what a sustainable year looks like. Not a fantasy month. What percentage return would you be proud of over 12 months, not 12 days? Post that number where you can see it. Second, set maximum position sizes in advance. No matter how perfect the setup looks, you never exceed that limit. This forces you to protect your capital even when greed flares up. Third, build delayed gratification into your process. After a big win, take the next day off. This interrupts the impulse to immediately chase more. Fourth, track your emotional state before every oversized trade. Note what you were feeling. Hope? Fear? Desperation? Over time, you'll see the pattern. Quick money always feels urgent. Sustainable growth feels steady. Fifth, celebrate boring consistency. Daryl eventually created a ritual. Every week he stuck to his plan. He bought himself something small. A book, a good meal. It sounds trivial, but it trained his brain to associate discipline with reward. Trading isn't magic. It's not a shortcut out of discomfort. It's a skill that grows slowly. And only if you're willing to respect the timeline. If you keep chasing quick money, you'll spend years stuck in the same place. But if you can let go of the fantasy, you'll finally have the space to build something that lasts. Chapter 5. The need for constant confirmation. In the casino, the dealer tells you if you've won or lost in seconds. The machine lights up. The coins drop. The dopamine hits your brain before you have time to think. It's instant. And that's exactly why gambling feels so addictive. Trading can feel the same if you let it. You click the button, and a part of you starts craving immediate reassurance. That you're right. That you're safe. That you've made the right decision. So you watch every tick. You refresh your platform. You check your panel like it's a lifeline. You need constant confirmation. I once worked with a trader named Emily. She was 34, living in Vancouver, trading Forex from a small home office. She had a solid system. Clear rules. Defined stops. But every time she entered a trade, she'd stare at the chart without blinking. If price moved a few points against her, she'd panic and close early. If it moved in her favor, she'd feel instant relief. Only to second-guess the exit moments later. She told me, "I feel like I can't breathe until I know I'm right." That's what constant confirmation really is. A way to manage the discomfort of uncertainty. But the market doesn't give out gold stars for reassurance. It moves in its own time. And if you can't sit with that ambiguity, you'll sabotage yourself over and over. Ask yourself, how often do you exit trades early because you can't handle watching them fluctuate? How often do you check your account balance multiple times a session? How often do you feel a spike of anxiety when you don't have clarity about where price is heading? This isn't about strategy. It's about your relationship with not knowing. Constant confirmation is exhausting. It keeps your nervous system locked in fight or flight. And the more you feed it, the harder it is to break. Because every time you close a trade just to feel relief, you teach your brain that escaping discomfort is more important than following your plan. So how do you break this cycle? First, set clear rules about when you will and won't look at your positions. Emily started by checking her trades only every 30 minutes. At first, she felt like she was flying blind. But over time, her anxiety dropped. Because she wasn't reacting to every tiny move. Second, use an alert system instead of watching the chart. Set price alerts at levels that actually matter. When you don't have to stare at every candle, you're less likely to act impulsively. Third, keep your panel hidden during active trades. It sounds radical, but it works. When you remove the constant scoreboard, you free yourself to focus on process. Fourth, practice sitting with the urge without acting on it. Set a timer for 5 minutes. When you feel the need to check, just wait. Notice the discomfort in your body. Breathe. This is how you rewire your response to uncertainty. Fifth, redefine what success feels like. Success isn't the relief you feel when you know you're right. It's the steadiness you build by staying aligned with your plan, win or lose. Emily eventually told me. I used to think trading was about control. Now I see it's about trust. And trust only grows when you stop needing proof every second. You can't trade professionally if you're chasing constant reassurance. Because no system, no mentor, no indicator can make the market predictable. The only way to trade with clarity is to accept that not knowing is part of the job. And the more you practice sitting with that, the stronger and calmer you become. Chapter 6. The addiction to one more trade. There's a moment in every trading session when you hear the voice. Just one more. One more trade to make up for the loss. One more to lock in a win. One more because you feel like you're almost there. It sounds harmless. It sounds rational. But that voice is the same one that keeps gamblers glued to the table until dawn. I worked with a trader named Faisal. He was 39, living in Dubai, trading gold and indices. Every morning, he set a limit. 3 trades maximum. But by the end of most sessions, he'd taken 8, sometimes 10. When I asked him why he kept breaking his rule, he said, I always feel like the next one will be the one that fixes everything. That's the addiction to one more. It's driven by the illusion that the next click is special. That it will make the day feel complete. That it will erase the discomfort of ending flat or negative. And it rarely does. Most of the time, that last trade isn't part of your plan. It's an emotional reaction. A desperate attempt to feel better before you close the platform. Ask yourself, how often do you keep trading long after your edge is gone? How often do you tell yourself you'll stop after this next one? But you never do? How often does one more turn into just one more after that? This is not discipline. It's compulsion. The casino mentality thrives on this pattern. Because every time you stay a little longer, you teach your brain that your limits aren't real. That your rules are optional when emotions run high. And over time, you build a habit of abandoning structure the moment things feel unfinished. Here's the truth. There will always be another trade. The market doesn't close when you walk away. And if you can't end your session without chasing that final hit of resolution, you will never feel safe stepping away. So how do you break this addiction? First, define your maximum daily trades in writing. Not just in your mind. On paper. Faisal eventually committed to a simple rule. 3 trades. Win or lose. Then done. Seeing it in black and white made it harder to rationalize breaking it. Second, set an alarm on your phone for when your session ends. When the alarm goes off, you stop. Even if you feel like you're on the edge of a breakthrough. Discipline is built in those moments. Third, create a closing ritual. At the end of your session, write down how you followed your plan, what you learned, one thing you did well, then physically shut down your trading platform. This signals to your nervous system that the work is over. Fourth, track your one more trades separately. Faisal started marking them in red in his journal. He was shocked to see how consistently they were the worst performers. Seeing the data broke the illusion that they were helping. Fifth, practice leaving something on the table. Intentionally end your session even if you see setups forming. This builds your capacity to tolerate the fear of missing out. And that is an essential skill. If you can't stop, you're not trading. You're chasing. And nothing good comes from chasing. Faisal eventually told me. I thought the next trade would fix my day. But most of the time, it just broke my discipline. There is nothing magical about one more. There is only the decision to keep gambling. Or to walk away with your process intact. When you learn to stop without needing resolution, you free yourself from the cycle that keeps so many traders stuck. That's where real progress begins. Chapter 7. The Illusion of Recovery Trading. Nothing feels quite as urgent as digging yourself out of a hole. One bad trade becomes a small loss. A small loss becomes a big loss. And suddenly, all you can think about is getting back to even. This is where recovery trading starts. And it's one of the most seductive traps in the casino mentality. I worked with a trader named Hannah. She was 33, living in Edinburgh, trading the FTSE. Her system was solid. Her risk management was clear. But whenever she took a loss larger than she planned, she couldn't stop. She'd tell herself, if I can just make back half, I'll walk away. But she never did. Because once she started trying to recover, she couldn't think straight. Every trade after that was fueled by the same thought. I can't end the day like this. That's the illusion of recovery trading. It feels rational. It feels responsible. But it's actually pure emotion. Because what you're really trying to recover isn't money. It's your sense of control. Ask yourself. How often have you increased your size after a loss to make it back faster? How often have you traded setups you'd normally avoid, just to feel like you're taking action? How often has your biggest drawdown come not from one trade, but from the chain reaction that followed? This isn't strategy. It's panic wearing a mask of determination. Here's the truth no one wants to admit. Losses are part of trading. Sometimes you do everything right, and you still end the day negative. That doesn't mean you've failed. It means you were doing your job. But the casino mentality hates that answer. It tells you that you have to fix it now. That if you don't end green, you've wasted the day. That voice is a liar. So how do you break the cycle of recovery trading? First, set a maximum daily loss limit in dollars or percentages. Write it down. Commit that once you hit that number, you are done for the day. No exceptions. Hannah eventually set a 2% daily loss cap. It felt constricting at first, but it saved her from countless meltdowns. Second, create a 30-minute pause rule after any significant loss. When you take a big hit, set a timer. No trading, no analyzing, no planning. This gives your nervous system space to calm down. Third, separate the loss from your identity. Write this sentence after every losing day. I took a planned risk. This does not define me. It sounds simple, but it helps short-circuit the shame that fuels recovery trading. Fourth, track your recovery trades in your journal. Mark them in a different color. Over time, you'll see the pattern. Recovery trades almost always underperform. Seeing that data makes it harder to keep believing they're a good idea. Fifth, practice ending negative days on purpose. Some days, stop before you've fixed anything. Leave the loss unbalanced. This teaches you to tolerate unfinished business without compulsive action. Hannah eventually told me. The first time I walked away still down for the day, it was awful. But the second time, it was easier. And by the 10th, I realized the world didn't end. Here's what you have to understand. You don't need to recover immediately. You need to protect your clarity. Because clarity is what makes the next session possible. Recovery trading feels heroic. But it's just another way to gamble. When you learn to accept a losing day without trying to erase it, you become unshakable. That's what professionalism looks like. Chapter 8. The Thrill of Overleveraging. There's a rush that traders almost never talk about openly. The moment you size up beyond reason. The moment you push your position to the limit. The moment you tell yourself, this time, I'm all in. It feels dangerous. It feels exhilarating. It feels like proof that you're bold enough to do what others won't. But most of the time, overleveraging isn't courage. It's desperation. I worked with a trader named Zach. He was 41, living in Austin, trading micro indices. He was meticulous most days, risking no more than 1% per trade. But every few weeks, he'd get restless. He'd watch a setup and think, if this one works, I could double my account. And so he'd size up 5, 10, sometimes 20 times larger than usual. When it worked, he felt unstoppable. When it didn't, he spent weeks digging out of the hole. That's the thrill of overleveraging. It creates an illusion of power. Because in that moment, you're not just placing a trade. You're making a statement. I am in control. I can change everything right now. But that feeling is borrowed. Because the moment price moves against you, all that power dissolves into fear. Ask yourself, have you ever increased your size because you were tired of slow progress? Have you ever justified risking too much because the setup looked perfect? Have you ever felt a surge of adrenaline just from clicking a trade with oversized risk? This is the casino wiring in action. Over-leveraging doesn't start in the chart. It starts in your mind. It starts in the story that you're behind, that you need to catch up, that the normal pace of growth isn't good enough. The problem isn't that big trades always fail. Sometimes they work. And that's what makes them so addictive. Because one successful over-leveraged trade plants a seed. If I did it once, I can do it again. But over time, the math catches up. One mistake with oversized risk can erase months of steady work. So how do you break this pattern? First, set an absolute maximum position size. In writing, Zach eventually defined his limit. No trade could risk more than 2% of capital. If he wanted to size up, he had to prove the plan and demo first. Second, create a cooling off period for any urge to over-leverage. When you feel the pull, step away for 15 minutes. Ask yourself, what am I trying to solve by risking this much? Usually, it's not about the trade. It's about escaping the feeling of not being enough. Third, track every over-leveraged trade separately. Calculate how those trades have impacted your long-term performance. Seeing the damage in black and white helps you break the fantasy. Fourth, reframe your timeline. Growth doesn't have to be explosive. Write this somewhere you see it daily. I am not behind. I am exactly where I need to be. This reminder softens the urgency that fuels reckless decisions. Fifth, celebrate small, consistent gains. Every time you stick to your planned size, mark it as a win. Zach started rewarding himself with something simple. A good meal, an hour offline. This helped his brain associate discipline with satisfaction. Over-leveraging isn't about mastery. It's about avoiding patience. It's about trying to shortcut a process that can't be rushed. The day you decide that slow progress is acceptable, you take away the leverage casino's power. You reclaim your timeline. You reclaim your peace. And you finally start to grow in a way that lasts. Chapter 9. When hope becomes a strategy. There's nothing wrong with optimism. In fact, you need some measure of belief to keep showing up to the charts every day. But hope, ungrounded in process, is dangerous. Because hope has a way of sneaking into your strategy when you're tired, frustrated, or desperate. It's the little voice that says, maybe this time it will work out. And that's when you start making decisions not from a plan, but from longing. I worked with a trader named Ilya. He was 37, living in Warsaw, trading European equities. He had a clear system and good risk management when he was centered. But whenever he'd had a few red days in a row, something shifted. He'd see a mediocre setup and convince himself. It has potential. He'd hold losers past his stop because he was sure they'd turn. He'd add to positions not because the chart said so, but because he couldn't bear to close red again. When we looked at his journal, the pattern was obvious. He wasn't trading his plan. He was trading his hope. Hope feels like faith. But they are not the same. Faith is grounded in preparation. Hope, without structure, is gambling. Ask yourself, how often do you hold trades beyond your plan, whispering to yourself, it just needs a little more time? How often do you take setups you'd normally pee back on, just because you want to end your day positive? How often do you feel a sense of relief when you click the button? Even if you know you're forcing it? This is what happens when hope becomes your primary strategy. It's comforting in the moment. It gives you something to believe in. But it almost always costs you in the end. Because no amount of hope can change what the market is actually doing. So how do you break this cycle? First, define what qualifies as a valid trade. Write down specific, objective criteria. If your setup doesn't meet them, you do not enter. No exceptions. Ilya eventually created a checklist he had to complete before every position. Second, use a timer when you feel tempted to hold and hope. When price hits your stop, set a 2-minute pause. In that time, ask yourself, if I were flat right now, would I enter here? If the answer is no, you exit. This recenters your perspective. Third, track how many times you override your stop. Make a separate log for these trades. Over time, you'll see that hoping almost never improves outcomes. Fourth, build small acts of accountability. Send your plan to a trading friend before the session. Ilya started sharing screenshots of his entries and exits with a mentor. This made it harder to rationalize decisions he knew were driven by hope. Fifth, practice acceptance. Before you trade, remind yourself, I will have losing days. That doesn't mean I have to make them back today. Saying this out loud helps your mind detach from urgency. Hope will always show up. It's part of being human. But your job isn't to eliminate it. Your job is to notice when it's in the driver's seat. And gently take the wheel back. Ilya eventually learned to close his trades exactly where he planned. It was uncomfortable at first. He said. It felt like giving up on the trade. But really, it was giving up on the illusion I could control the outcome. When you trade your plan instead of your hope, you lose less often. But more importantly, you lose more gracefully. And over time, that grace compounds into confidence. Chapter 10. The Seduction of the Big Win. Almost every trader has a story about the big win. The trade that worked perfectly. The day you felt like you cracked the code. The rush of watching your pendulum explode in real time. It doesn't matter if it was luck or skill. That moment imprints itself. And once you taste it, you start chasing it. Not consciously. Not at first. But deep down, you start measuring every trade against that memory. I worked with a trader named Raj. He was 35, living in Toronto, trading sand futures. 6 months into his journey, he caught a massive move. One trade, nearly 20R. He hadn't planned it perfectly. He got lucky with a new spike. But it didn't matter. From that day forward, every session felt dull by comparison. He told me, I know I shouldn't expect trades like that every week, but part of me feels like that's the goal. That's the seduction of the big win. It sets a new standard in your mind. And without realizing it, you start overreaching to recreate the feeling. Ask yourself, have you ever held a position far beyond your plan because you remembered that one time it worked? Have you ever increased size because you were hoping for a repeat of the big day? Have you ever felt bored or frustrated when normal trades felt too small? This is the casino mindset at its most subtle. Because the big win changes your expectations. It convinces you that your purpose is to hit another jackpot. And that belief corrodes discipline in small, quiet ways. You pee back on clean setups because they don't feel worth it. You hold losers longer, hoping they'll turn into monsters. You forget that trading is about consistent execution. Not occasional fireworks. The truth is, big wins are not a strategy. They're a byproduct of a process you respect over time. When you make them your goal, you start trading for sensation, not sustainability. So how do you break this pattern? First, redefine success. Write down what a good day looks like that has nothing to do with size. For Raj, it became one clean trade, one clean exit, one lesson learned. This brought him back to process over outcome. Second, track your average R per trade over the past 50 trades. This helps you recalibrate expectations. When you see your normal performance range in black and white, it's easier to stop expecting lightning to strike every week. Third, create a maximum target per session. This sounds counterintuitive, but it prevents you from overstaying winners trying to force an outsized result. For example, if I hit 3R, I stop for the day. Fourth, build in a practice of gratitude. After each trade, no matter how small the gain, write down one sentence. I'm grateful for this progress. It sounds soft, but it breaks the habit of dismissing anything that doesn't feel massive. Fifth, remember that most professionals build wealth through consistency, not jackpots. Big wins happen, but they are never planned. What is planned is risk, discipline, and structure. Raj eventually started trading smaller size with stricter targets. At first, he felt bored. He missed the adrenaline. But over time, he realized he was finally profitable month after month. He said, it stopped feeling like a casino. It started feeling like a business. The seduction of the big win will always be there. Your job isn't to pretend you don't want it. Your job is to refuse to let that desire run your decisions. When you trade for consistency, you create something sustainable. And ironically, that's when the occasional big win finds you. Not because you chased it, but because you were ready. Chapter 11. The Cycle of Tilt and Regret. There's a point in every trader's journey when the rational part of you goes offline. You know your plan. You know your risk limits. You know better. But something snaps. And before you realize what's happening, you're clicking without thinking, sizing up, chasing losses, doing everything you promised yourself you wouldn't do. That's tilt. It feels like an out-of-body experience. Like watching someone else sabotage everything you worked for. And when it's over, regret comes in heavy. I worked with a trader named Erica. She was 42, living in Chicago, trading NASDAQ futures. Most days, she was measured, disciplined, methodical. But after any loss that felt unfair, slippage, new spike, a sudden reversal, she lost all perspective. She'd revenge trade until she blew her daily limit, sometimes in less than an hour. Then she'd shut her platform, sit in the dark, and replay every decision. She told me, I don't know why I do it. I watch myself ruin everything and I still can't stop. That's the cycle of tilt and regret. First the trigger. Then the spiral. Then the shame. And if you don't interrupt it, you'll start believing you're fundamentally broken. But you're not. You're human. Tilt is what happens when your nervous system hijacks your strategy. It's your brain trying to get relief from pain by taking action. Any action. Ask yourself. How often do you feel compelled to win back losses immediately? How often do you break your rules after one bad trade? How often does regret become so overwhelming you can't trade the next day? This is not a sign of weakness. It's a sign you need a better protocol for emotional resets. Here's how you begin to dismantle the cycle. First, define your tilt triggers. Make a list of what reliably sets you off. For Erica, it was unexpected slippage and missing entries by one tick. Knowing your triggers helps you spot the storm before it hits. Second, create a hard stop after any tilt trigger. This isn't negotiable. If you hit that point, you step away. No debate. Erica set a rule. If I break one rule, I take a 60-minute timeout before any next trade. Third, build a reset ritual. When you feel yourself tilting, stand up. Leave the room. Breathe slowly for 5 minutes. Write down exactly what triggered you. This interrupts the impulse loop long enough for your rational mind to re-engage. Fourth, forgive yourself in writing. After a tilt session, instead of replaying every mistake on loop, write this sentence. Today I let my emotions drive my trading. I'm still learning, and this doesn't define me. Self-recrimination doesn't make you more disciplined. It just makes you afraid to try again. Fifth, measure progress by your ability to stop the spiral. Not by whether you avoided it altogether. Even catching yourself after 2 bad trades is better than 5. Over time, those catches get earlier. That's how mastery looks in real life. Gradual, messy, imperfect. Erica eventually told me. I thought discipline meant never tilting. Now I see it means catching tilt before it burns down the whole day. Here's the truth. Tilt will never fully disappear. You can't eliminate your emotions. But you can learn to recognize the moment you cross the line. And choose not to follow. And when you do that, you break the most destructive part of the casino mentality. The belief that you have to fix your pain by taking action. Sometimes, the bravest action is to stop. Chapter 12. The myth of hot streaks. Every trader has had a week when everything clicks. Your setups work perfectly. Your discipline feels unshakable. Your account grows faster than you imagined. And you start to believe you're on a hot streak. It feels like you've finally arrived. That all the struggle is behind you. That you're just one step away from permanent success. But that belief is a trap. Because the idea of a hot streak is the casino mindset in disguise. I worked with a trader named Daniel. He was 45, living in Munich, trading the DAX. After months of uneven results, he hit a run of 10 winning days. He told me, "It's like I've leveled up. I finally see the matrix." He doubled his size, convinced he had unlocked a new gear. Within a week, he gave back most of the gains. And worse. He started doubting everything. He said, "I thought I was better than this. I thought I was done losing." That's how the myth of the hot streak destroys traders. It makes you forget that trading is a game of probabilities. You confuse a cluster of positive outcomes with proof that you've evolved forever. Ask yourself, have you ever increased your size dramatically after a stretch of good days? Have you ever felt invincible and started breaking your own rules? Have you ever told yourself you were finally fixed, only to fall back to old habits? That's not progress. That's the dopamine high of winning. And it's just as dangerous as fear. Because consistency isn't built in a week. It's built in the months when nothing feels special. Here's how you avoid this trap. First, track your win rate and average are over at least 100 trades. This gives you a real picture of your edge. Daniel eventually realized that even with his best run, his long-term stats hadn't changed much. Seeing that data brought him back to reality. Second, create a rule. No size increases during a winning streak. Wait for at least 20 trades after any peak performance before adjusting risk. This forces you to prove that your process, not variance, is driving results. Third, define your process-based goals. Write them down. For example, I will follow my plan 90% of the time. I will journal every trade. I will not exceed my max size. When your goals are process-based, you don't get seduced by short-term outcomes. Fourth, build in a cool-down ritual after big weeks. Daniel started taking every Friday off when he had multiple green days. This helped him reset emotionally and come back neutral. Fifth, remember that nothing has clicked forever. Markets evolve. Edges decay. You will always be learning. Believing you finally cracked it is the surest way to get humbled. A real professional doesn't need the rush of a hot streak to feel confident. They know the work is the same whether they're up or down. They know discipline is a daily practice, not a trophy you earn once. Daniel eventually told me. When I stopped celebrating streaks, my results stabilized. I stopped making every win a referendum on my worth. Here's the truth. Hot streaks feel amazing. They will happen again. But they don't mean you're invincible. And they don't mean you're finished learning. When you stop worshipping the idea of a hot streak, you become free to trade each day as it is. Not as you wish it to be. Chapter 13. The fantasy of the one perfect system. When you first start trading, you think your problem is knowledge. If you could just find the right indicator, the right mentor, the right strategy, everything would fall into place. You'd never feel uncertain again. You'd never have to second guess yourself. You'd never have to sit in the discomfort of losing. This is the fantasy of the one perfect system. And it keeps more traders stuck than almost anything else. I worked with a trader named Simone. She was 40, living in Florence, trading Euro futures. She had spent 6 years hopping between methods. She'd commit for a few weeks, then abandon the system at the first big drawdown. Then she'd buy another course, convinced this one was the missing piece. Every time, she'd feel hopeful. Every time, she'd feel certain this would finally be the answer. She told me, "I just don't want to feel confused anymore." That's what the fantasy really is. It's not about finding the perfect entries. It's about escaping the feeling of doubt. Ask yourself, how many times have you switched strategies after a losing streak? How often do you read about someone else's approach and feel like you're doing everything wrong? How much time have you spent looking for certainty instead of building skill? This search feels productive. It feels like work. But it's avoidance. Because the truth is, no system will ever eliminate uncertainty. Here's why. All systems have losing periods. All edges decay if you stop adapting. All methods require you to tolerate doubt. Even if you found the best approach in the world, you would still have days when it didn't work. Simone eventually realized that her real problem wasn't her method. It was her inability to stick with anything long enough to see results. She was trading her fear of discomfort, not the market. So how do you break this pattern? First, define your criteria for what makes a system valid. Write it down. Does it have clear rules? Does it have positive expectancy over at least 50 trades? Is it a good fit for your schedule and temperament? If the answer is yes, commit to testing it. Without adding new variables. Second, create a minimum trial period. Simone set hers at 3 months. For 90 days, she was not allowed to switch or tweak her approach. This forced her to build data before making judgments. Third, track your feelings during the test phase. Every time you feel tempted to abandon the system, write down why. Often, you'll see the same pattern. Discomfort, doubt, search for something new. Seeing it on paper makes it easier to pause. Fourth, accept that no system feels perfect in real time. You will always wonder if there's something better. That's normal. Write this reminder somewhere you can see it. Clarity comes from commitment, not from constant searching. Fifth, measure progress by process adherence, not pandal. Ask yourself daily, did I follow my plan today? If you did, that is success. Even if the outcome was negative. Simone told me later. Once I committed to one system, my stress went down. Even on losing days, at least I knew what I was doing. Here's the truth. There is no perfect system. There is only a system you are willing to respect long enough to learn from it. When you let go of the fantasy, you free yourself to do the real work. Practicing. Refining. Showing up. Not chasing. Chapter 14. The Trap of Entertainment Trading. Most people won't admit this out loud, but sometimes trading isn't about the money at all. Sometimes it's about distraction. About having something to do. About feeling important and engaged when the rest of your life feels dull. This is the trap of entertainment trading. And it's one of the most expensive habits you can build. I worked with a trader named Victor. He was 47, living in Brisbane, trading Asian indices. His job was boring. His evenings were empty. And trading became his escape. He'd sit down every night and open positions without a clear reason. He'd tell himself he was testing ideas. But really, he was filling time. He told me, I don't even care if I make money most days. I just can't stand doing nothing. That's when I knew. He wasn't trading. He was entertaining himself. Ask yourself, how often do you trade when you're tired or bored? How often do you open your platform without a clear intention? How often do you feel restless if you're not in a position? This isn't discipline. It's compulsion disguised as productivity. Entertainment trading has a predictable pattern. You start your session with no plan. You click around looking for opportunities. You feel a surge of excitement when you're finally in a trade. You justify poor decisions by telling yourself you're practicing. But you're not practicing. You're gambling. Here's why this pattern is so dangerous. It doesn't feel reckless in the moment. Because you're not sizing up wildly or chasing losses. You're simply filling the emptiness. But over time, it erodes your confidence. Because every time you treat trading like a game, you teach yourself that your process doesn't matter. And you build a habit of using the market to numb your feelings. Victor eventually realized he didn't even enjoy trading for profit anymore. He just liked the stimulation. So how do you break this habit? First, define exactly when you will and won't trade. Put it on your calendar. No sessions without a preset schedule. Victor created a rule. No trading after 9 p.m., no spontaneous sessions. Second, write down your goal before every session. Is it to practice a strategy? To test a hypothesis? To execute your plan? If you can't name the purpose, you don't trade. Third, track the difference between entertainment trades and planned trades. Use a separate log. Seeing how the entertainment trades perform over time will make it obvious how much they cost you. Fourth, create an alternative outlet for boredom. Victor started keeping a list of activities he could do instead of trading. Reading, journaling, walking. This gave his mind somewhere else to go when he felt restless. Fifth, celebrate no trade days. Write down. Today I didn't force anything. That is progress. Consistency often looks like inaction. Here's the truth. Trading can be interesting. It can be exciting. But it cannot be your entertainment. Because the moment you treat it like a pastime, you stop treating it like a business. Victor eventually told me. I thought I needed trading to feel alive. Turns out, I just needed to learn how to be still. When you break the habit of entertainment trading, you make space for something better. Patience. Clarity. Respect for your own process. That's when trading starts to feel clean again. Chapter 15. Trading as a profession, not a game. If you've been trading long enough, you've probably noticed something. Most of what people say about trading makes it sound like a contest. A contest for who can post the biggest gains. Who can call the market first. Who can look the smartest online. And if you're not careful, you start to think that's what this is about. Winning. Beating others. Being right. But the longer you stay in this game, the more you realize. Trading is not a game. It's a profession. And until you treat it that way, you'll never find the consistency you're searching for. I worked with a trader named Claire. She was 38, living in Paris, trading options. In her first 2 years, she approached trading like a competitive sport. She'd join chat rooms to see who was crushing it. She'd share her wins to get validation. She'd take trades she didn't believe in just to avoid feeling left out. She told me, I felt like I was always performing. Like every trade was proving whether I belonged. That's what happens when you treat trading as a game. You build your identity around wins and losses. You judge yourself by how you look to others. And you forget that the point isn't to impress anyone. It's to execute your process with integrity. Ask yourself, how often do you feel pressured to take a trade because you don't want to fall behind? How often do you size up to make your panel look better? How often do you think about what others would say about your results? If you recognize this, you're not alone. The trading world makes it easy to slip into performance mode. But that mindset is exactly what keeps you stuck in the casino mentality. So how do you step out of that trap and into professionalism? First, create a personal mission statement. Why do you trade? Not why others think you should. Not what looks impressive. Your real reason. For Claire, it became, I trade to create freedom for my family and to become more patient with myself. Post it where you see it every day. Second, define what professionalism looks like to you. It might mean following your risk rules no matter what. Journaling after every session. Respecting time away from the screen. Write it down. When you know your standards, you stop borrowing them from other people. Third, commit to consistency over excitement. Professional trading is often boring. It's the same entries. The same exits. The same routine. Celebrate that. Because boredom is a sign you're not gambling anymore. Fourth, practice trading without an audience. Take a month where you don't share your trades publicly. No posts. No bragging. No explaining. Claire said this was the most liberating thing she ever did. Because for the first time, she was trading only for herself. Fifth, measure your progress by behavior, not results. Every week, ask, did I follow my process? If the answer is yes, you succeeded. No matter what the panel says. When you approach trading as a profession, you stop needing it to make you feel special. You don't have to prove anything. You don't have to chase anything. You can just show up, do your work, and let the outcomes take care of themselves over time. Claire eventually told me, trading feels so much simpler now. It's not who I am. It's just what I do, with care. This is the mindset that creates lasting success. Trading as a profession, not a game. A process, not a performance. A craft, not a contest. If you've made it this far, you've already done something most traders never will. You've paused long enough to look honestly at why you trade. You've been willing to ask yourself hard questions. Am I trading to feel alive? Am I chasing the rush? Am I trying to escape something I don't want to feel? That honesty is rare. And it's the first step in breaking free from the casino mentality. Because this work isn't about finding the perfect system. Or predicting every move. Or proving you're smarter than the rest. It's about learning to respect your process more than your impulses. To trust discipline more than adrenaline. To see trading as a professional practice. Not a place to gamble with your self-worth. You don't have to keep clicking out of boredom. You don't have to keep chasing losses to feel whole. You don't have to keep measuring your value by your last trade. You can choose a different path. One built on consistency. One built on self-respect. One built on the quiet confidence that comes from doing your work with care, even when no one is watching. If any part of this resonated with you, I invite you to take one small action right now. Pick one of the practices you heard today. Write it down. Commit to trying it for the next week. Maybe it's limiting your session times. Maybe it's creating a journal of impulsive trades. Maybe it's simply pausing before you click buy. Whatever it is, take that step. Because awareness without action is just another form of procrastination. And you deserve more than that. Thank you for spending this time with me. Remember, you are not here to gamble. You are here to build something steady. Something real. Something that will last. And it starts the moment you decide. I don't need the rush anymore. I'm ready to trade like a professional.